have an exclusive update for SRS listeners. There's so much going on in our world, and especially the world of gold and silver. We're seeing things like the cryptocurrencies breaking down and having huge drops as the closer time comes to having cryptocurrencies that are backed by gold. Who wants a regular cryptocurrency if you can have one backed by gold? So now we're seeing Bitcoin and others taking big drops, as Steve has predicted many times on his own show and his own articles. We're also seeing the world debt explode, as Steve Evans last week in his excellent article on what we're seeing in the debt. And even the U.S. Treasury now has a 2-month Treasury because nothing gets paid off, everything gets rolled over. So you've got to realize that the debt is compounding at an alarming rate. Having started in this industry, in the financial planning industry, in the early 1970s, right when gold first became a business, because you couldn't own gold prior to 1971 until Nixon changed things. But we always had, and still do have, a thing we called Rule 72. And that is, if you take a return and divide it into 72, it tells you how long it takes an investment to double. If it was a piece of property or an ounce of gold or a stock or whatever. So if you divide 8% a year into 72, it takes 9 years for your 10,000 to turn into 20,000. If you were making 12% return, then your 10,000 would turn in 6 years. You divide the 12% into 72, takes 6 years to double. We've had two big movements in silver in my career since 1976 when I started this company. We first saw the move of the 76 to 1980 when the price of silver moved from $3 to $50 during the Hunt debacle. Then we fast forward to 2000 to 2011, we saw it go from $3 to $48, up 16 times again. And now we've seen it come all the way back to where it is now in the low 1400s. Now here's what's interesting about that. We just saw an article that Steve put out on the 10 top silver miners. It's costing them over $15 with a range from the 14s to the 16s just to break even. So we're now seeing silver is below mining cost. If you take the top 10 miners and average them together, we are below mining costs, which I've only seen about 4 times in my whole career. In gold, we see that the 8 top gold miners are averaging about 1204, so they're making a very small profit with gold at 1220. They're making about a $16 profit, but some of them are like in the 1280s to break even, and there's 2 of them, 1140 to 1160 to break even. So once again, we're looking at these things barely breaking even. In the case of silver, it's not even breaking even. But here's the thing you don't know that I follow closely because of my daily business. The premiums on silver coins have soared since June and July, 25 to 35 cents per ounce. We've now got delays on some silver products. We've just heard a major refinery say the diversion back to the U.S. has started. We saw for a while there where we weren't buying, the U.S. mint numbers were way off on silver and gold, but now all of a sudden the American buyers are buying back in because the price is below mining cost. The premiums have gone up dramatically since July. There are delays on certain silver products. So it doesn't take a genius to figure out that this thing is only waiting on one thing, and that is for JP Morgan, Goldman Sachs, other major market players to drop their short positions and either go neutral or into a long position in gold and silver. We're getting rumors that continue to come out of Singapore stronger and stronger that it will be before March of 2019 that we'll see these companies come out and move from the short side to the long side like they did in 2000. Remember, silver went up 11 straight years. I think there's one year it went down. But gold did go up 11 straight years when they moved over. And if you don't think they are, just look at their position in physical silver. Some people say it's 500 million ounces. We saw last week someone claiming they have 800 million ounces of physical silver. All we know for sure they have is what they have for delivery in the COMEX warehouses, which is 135 million ounces of physical silver. We know they probably have at least double that. But they can move out of short positions and just silver go up $2 and 500 million ounces gives you $1 billion movement to the upside. But when that happens, silver is going to go like a rocket as it has in 77 to 80 and 2000 to 2011. And this time it's not going to be taking off from $3. It's going to take off from around mining cost, $14 to $15 where it is now. The only thing you have to worry about is when, not if. And then when it does take off. And if you want further evidence, just look at the industrial demand for silver soaring. We're just waiting on investors to get back in the market. We're seeing the solar panels being built. We see companies like Tesla entering the silver market. We see factories popping up in the northeast of the United States to make solar panels for California and for China. And this is going to drain the silver market to where we're seeing some predictions that the physical silver will be wiped off of this planet the next 5 years. And if you're holding some physical silver, you're going to be a huge winner. And we've talked about this. Steve announced this years ago, 3 years ago, when we became the lowest storage rate in the world. And to my knowledge, we're the only company that doesn't take any. We mark up the storage nothing. We've arranged for you lower storage rates than the major ETFs who have $800 million in it. Your rate is better than that. And if you don't have a brochure on our storage programs, we would urge you to call us at 800-247-2812. That's 800-247-2812. And we'll send you electronically our storage program that is unbelievable. We're seeing people every month leaving other dealers because we don't mark storage up. We're over 50% below what every storage fee we've seen is. And we don't charge you to sell it. And if it's already there, we can sell it for you. And if you're storing somewhere else and you've got over $100,000 in storage, you need to talk to us because we can tell you how you can become one of our clients at an unbelievable entry position right now that won't be around in January. So if you want to know how you can have that move to a very, very low storage rate, give us a call and compare your current rate with our rate, and I think we can talk turkey and do some business. But just look at everything we've talked about today and just know that we're at a turning point. It may take till April, March, next fall. I don't know and I don't care. All I know is you can buy it now at an incredible price before everybody moves in. I could spend the next 30 minutes telling you about my consulting business and major financial planners, money managers calling and buying my time. I'll bill more last month now, the rest of the year, because they want to be in there before this market takes off with a percentage of their clients' assets. Now, what percentage you put in is up to you. We're here to answer your questions and help you get a position in hard assets. I could spend another 30 minutes telling you why the dollar will collapse in the next 5 or 6 years, and all this debt is going to have to be printed, and because nobody's buying the U.S. debt. And here we are hearing that the Fed's going to raise rates again. They're going to kill the real estate business. They're going to kill the bond business. And gold is going to be one of the only businesses out there that's going to flourish during rising interest rates. But anyway, call and you can talk to me or Dan or Kathleen Dan's been with me well over 20 years, and is a true professional. And we do have your best interest. You can look from our low commission rates compared to anybody else in the market. And remember, we don't charge when you sell the back end, and we send it to you free, or we'll send it to your warehouse account free. And we can send it to either Canada, US, Singapore, or Cayman Islands. If that's where you want to store, we can tell you about each of those places. Hopefully we've triggered some points today while we're going into the holiday season. It's a great time to ponder your year-end bonuses and the percentages you want, and being sure you get your proper amount of hard assets in your portfolio prior to the end of the year and into the first quarter. So hopefully this special update for SRS listeners. This is Tom Cloud signing out.